Good afternoon, everybody. I believe we are live. Today is Friday, the 1st of October, 2010, and the market is closed. So let's go ahead and take a look here. The last couple of days, the market's been actually pretty quiet. When we look at the 10-minute time frame, let me just get this trend tool up here. But when we look at the 10-minute time frame, and let me shrink that down out of the way. The 10-minute time frame, you can see here that for the week, we pretty much spent it within a range of basically 113. 60 to 115. We only spent about, let's see, 30 minutes maybe there, and another 45 minutes, so maybe about an hour and a half outside of that range. It was really pretty quiet. We've got that 5-day moving average now flattening out here, and it holds up well, though. I think that's the key takeaway here, is that this market does continue to hold on to its gains well. The market, the corrections seem to be coming more through a sideways digestion through time, and what we're seeing is we have some pretty decent levels of what should be support below us, including the 200-day moving average down here now at about 112 and a half. So we, the market had held at the 113 level, and basically kind of got through that 115 area where we were expecting to be resistance. It quickly came back in, but the good news was that we didn't see one of those from a failed fast comes a from a failed move comes a fast move in the other direction. We still have the possibility that maybe we kind of just meander around in this area as the market kind of decides whether it's going to make a push up to the next level near 118 or so. But again, you have to look at it as pretty resilient. The market obviously had a huge month in September, and now we maybe begin to digest those gains a little bit. Next week, I think we want to kind of continue to look at about that 113.50-ish area as far as a support level goes, and then below that we've got the 113.20, which was the bigger level of the breakout. That's this level here, basically 113.20. That will continue to be important, as will these lows from the last couple of weeks, down near about 112. So we remain in a decent uptrend here. The rally's been pretty broad-based, really. You look at the NASDAQ, how it's holding on to these prior levels of resistance or holding the support. Real impressive the way it held those gains this week here. This week was, I guess, slightly down, but really not much downward progress at all. It's just kind of correcting more through time. And that's bullish. It says there's still buyers around. But if we crack this level, then I think you've got to look for the possibility that we come down and test probably that 20-day moving average in this prior area near about $48.80, which has been important. If next week we continue to push higher, I think looking at north of 50 seems reasonable here. The 10-minute time frame gives us a little bit more reason for hesitation, as we are below we're making these lower highs, and we have a declining 5-day moving average that we're closing below. But until we really break some support, I think at about $48.70, it's still kind of neutral here. But just this, the declining 5-day moving average says be real careful here. You don't want to be initiating aggressive long positions, I think, until you probably get back up above $49.60 or so. Let's look at the weekly time frame. Weekly time frame, I don't know why those always get stuck in there, but anyways, the weekly time frame is bullish looking, as of course is the SMH, which we know the 113 level is where we broke that neckline of the inverted head and shoulders pattern, and so that that adds obviously further strength or importance rather to the 113 level going forward. As long as we continue to hold above 113, I think you give the benefit of the doubt to the buyers, and for the most part, stocks are in uptrends and behaving very well. The Russell 2000 has been kind of poking at that the $68 area, which was the high of the summer, at least June, I guess. But it's been kind of poking away at that here the last couple of days, not closing above it, but doing some work in that area. And this is another market that we see has been just a nice steady pattern of higher highs and higher lows. We get these little resistance levels, a little shakeout there, but we haven't had a shakeout below this level of bigger support, which is about $67.10. So $67.10, I think, is what you want to kind kind of keep an eye on as far as a more important near-term level of support for the Russell 2000 next week. The semiconductors held on nicely to their gains. Once, as we know, they had gotten above that 50-day moving average and then the prior support, which was resistance at 27. So 27 is really the key level in the semiconductors. And bigger picture, they're more kind of in this range, I guess you would say, after having a shakeout below it in August or in early September. The semiconductors, looking at a weekly time frame, I don't know why those things always stick in there, but the weekly time frame, we can see that we still have here what looks like a pattern of lower highs and lower lows. So maybe a pullback towards 27 that holds its support in a higher low. Then these semiconductors can start to behave a little bit more bullishly. The financials continue to be stuck basically below this $14.60 level that we've had our eyes on for the last week and a half or two. That's right here. We had seen a move above the 5-day moving average, but it kind of halted right in that 1460, really 1460, 1465, basic area. But 1460 is an important level for this market. The good news is it's not breaking down. We had Meredith Whitney come on, and she wasn't overly negative about this, but she was more neutral, I guess, was kind of my takeaway. They tried to paint it as I saw some people trying to paint it as bearish because that's what she does, but that's not the case here. Is that I don't know if my microphone was close by, if you're hearing me okay, but anyways, let's see if that works better for the audio. No one had said anything that I could see, but the market is behaving well. If the financials can get back above $14.60, then I think you're going to get some upside action pretty quick in these financials. That's really been kind of the line in the sand. And if the financials can get moving, above 1460, and then even the bigger level, of course, is up near 1510, then this market could really kick it into high gear for the fourth quarter. On the flip side, though, if we break back down probably below 1420, then I think that's really going to weigh on the market. So earlier in the week, maybe Tuesday or Wednesday, I said it's nice to be in an environment where every tick in this market, that is in the broader market, isn't being held hostage to whatever the financials do. And that's still the case. It doesn't mean that the financials aren't or something that we don't have to pay attention to closely. I think the best way to look at these financials is set an alert maybe at $14.58, set an alert down near $14.30, and then see if that, otherwise kind of watching them here, at least to me, seems like a real waste of time. So, anyways, that's all I have about the financials, I guess. You too, Talia. The oil had a nice week. It kind of broke out of this little range here with these higher lows in here, but we've got the market past that resistance and looking like oil may be heading up towards $37 a share or so. So that's something to keep an eye on as well. It's still below this 150-day, still below that 200-day moving average. So oil's still kind of a mess, whereas gold is still just in a positive uptrend here. And you just can't fight a trend like that. You can get all the people in the world to say it's overdone, I can't find anyone bearish, and try to be a contrarian. But being a contrarian for the sake of being a contrarian can put you in a lot of unnecessary losses. Wait for price action to reverse before you decide to bet against the so-called madness of a crowd, and this isn't going to end well, and all this nonsense that you hear. Nobody knows how this gold market's going to end. Maybe it's going to end after it's up at $5,000 an ounce, as some people are saying. Who knows? You manage risk, you raise your stops, you look at it and say, what is comfortable for me personally, and take it from there. So I want to take a look at some of the comments. Thank you, Chart Diva, and thanks for the people who retweeted in the Friday follow Friday, whatever that is. Anyways, let's for reading the tape, take a look at ROVI. ROVI is in a beautiful uptrend. This was one actually we had traded last week, but it broke some resistance a week and a half ago. Nice little consolidation, made this real strong run, and here we are kind of pulling back so far on lighter volume relative to we had seen increasing volume on the way up. And I all summer I was saying, don't listen to these clowns talking about volume. Volume for the market, for the overall markets, volume isn't as important as it is for the individual stocks. What we want to see in an uptrend is expanding volume in the direction of the trend. It tends to peak near short-term turning points. And then we want to see on relative moves, that is on weakness, on pullbacks, we want to see the volume diminish. And that's what we're seeing here. So far on the daily time frame, it's looking like a healthy pullback right now at the 10-day moving average. So when we look down to a 10-minute time frame, though, what we see is we have this little pattern of lower highs and lower lows. We're below the 5-day moving average, and it seems as though maybe it's going to need to correct a little bit further. I don't think there's any reason to get involved in it yet. Kind of let it bleed out, turn sideways a little bit. So what we want to do is we want to look at it as, we want to participate in these stage 2 uptrends. We want to exit when it turns sideways, avoid the stage 4, anticipate, then participate in the stage 2 uptrends, get out of your long in that intermediate term stage 4, stage 3 rather, avoid the stage 4, and then wait for it to kind of accumulate and turn sideways, and then anticipate the next level that it might break past. For instance, maybe it's going to be 51.5, and that's where we'll have the uptrend on the daily time frame aligned with this shorter term time frame, which right now is showing lower highs and lower lows. So it's a great one to keep an eye on for sure, but I don't think you want to, you don't want to buy weakness, because the weakness can continue to be weak. Let's take a look for going Mackay at Pay. Pay experienced a real weird reversal here today. It was a nice move yesterday as it broke past some resistance. It's still on a great, healthy uptrend, but we were up on big volume yesterday, kind of gapped up a little bit today and closed right at the lows with some volume too. If you look at the 2-day volume weighted average price, so since yesterday's move, the average participant is long at about 50.80, so that's an important area, and that's actually not even I typed it in the wrong place, so let's try that again. The average price over the last 2 days is up here at $30 a share. So with that big volume in the last 2 days, there's a lot of longs that appear to be trapped in this stock right now. So I would stay away from this one. It looks like it was breaking out, a nice pattern of higher highs and higher lows, and then it broke down real hard today, trapped all these buyers in here, and I think that Pay is going to really need to have to heal for a while before you can see it capable of rallying again. So the weekly chart's still bullish. I'd say keep an eye on it, but it's just something that needs to heal a little bit. By the way, these solar, I also wanted to mention, I guess, Apple. Apple's correcting a little bit. When you look at the 10-day or 10-minute and 30-minute time frame, you can see Apple is near intermediate term. It's stuck below declining 5-day moving average with the lower highs and lower lows. We'd seen the 286 support act as resistance, and Apple's going to need to bleed out a little bit. Nothing can go up every single day, but Apple needs to probably pull back a little bit. Some of the solars really had great runs. This JASO, a lot of people make good profits in that. It made it up to a level that I was kind of identifying as a potential target, and where I had gotten out of some calls, which was right here at about $8.90. But these solars had a great week. Even some of these little LDK, for instance. And they're still looking good. I mean, look at this LDK up on massive volume. You look at the weekly time frame; it could still have some room to run here, but maybe needs to bleed out a little bit. But keep your eyes on these solar plays, even CSIC, which is a little junk one, and Yingli Energy, which we were watching for a move above that 200-day moving average on Wednesday. It did get above that and just rocketed higher. But some of these stocks that have really kind of lagged even in the solar group, and even the lowliest of lowly, well, maybe not the lowliest of lowly, but another junk solar, basically Evergreen Solar, bulletin board stock had some nice movement today. I had mentioned on Twitter that I had a small position. I still do have a small position in this SatCon. The reason I like this one is, it's been up on big volume. It's consolidating here. I'm early on it, but I have a small position to just kind of keep an eye on. And it really probably needs to clear. I think next week, if you could see this stock, this SatCon, above $3.93, that's where you're going to see that, here's the weekly chart where this resistance was holding a support. But you go out to a monthly time frame and look at this thing on a longer term and kind of put this into perspective by changing the scaling to see, where are we? Where do we have the potential to go? If this solar kind of madness that's occurring continues and we have strength in oil, which is going to be bullish for solars as well, this is the type of stock that, it breaks these highs, 393. I don't really see a reason why it shouldn't run pretty quickly up towards $5 a share. So I've got a position in there, and I'm going to add very aggressively if it does do that. So that's one just to kind of keep an eye on that really hasn't had a big move. And AEZS, let's take a look at that one. And AEZS is what's the average daily volume in here? It looks like 2.1 million shares. So it's plenty liquid. It had this great run earlier in the year, kind of bled out. Now this prior resistance in this area has $1.25 acted as support. We've got a rising 10, 20, and 50-day moving average. If just take a peek at that weekly time frame, still looks like something that probably could get going once again. It's one of these little stocks that jumps up and rallies don't typically hold very well, so they're good trading stocks. But maybe back above the highs of this week, or the 145 area, it would maybe be something you would want to look at once again. And I'm only doing one per person there, Mackay. So if that is all the requests, that's all that I see. Let me just check something else. Last time I saw that somebody typed it on StockTwits, and for some reason it didn't show up on this other screen I'm looking at. But let's take a look, and I guess that's going to do it. So, hey, I hope everybody has a good weekend and had a profitable week. We'll talk to you again on Wednesday of next week. Thanks.